At the end of 2021, we saw inflation hit 7% for the year, a rate we have not seen since the 1980s. Now, a majority of that increase came from energy, housing, and the auto markets. As a result, so far 2022 has been off to a rocky start to say the least. Now, with rising inflation, the Federal Reserve has a tool in their back pocket to try and slow down that inflation, which is to raise the Fed funds rate. And when they do this, the goal is to increase the cost of borrowing throughout the entire economy. Why would they want to do this? Higher rates makes loans more expensive for businesses and consumers, which may lead to people postponing, if not completely canceling their projects or large purchases. At the same time, this potentially encourages consumers to save money to earn higher interest rather than spend the money, which as a result reduces the supply of money in circulation, which tends to lower inflation and slow economic activity. Now, at the start of the year, the markets anticipated that the Fed would raise rates in the first quarter, which they ended up doing. The war in Ukraine, however, made matters worse in the markets, with fear of global uncertainty, increases in energy and wheat prices, in what has already been a rough start to the year. As we look ahead to Q2 and the rest of the year, there's continued concerns of a recession. Many analysts look to what is called the yield curve inversion for signs of a possible recession. And this is when short term interest rates are now higher than long term interest rates. Now, typically the reason for this is when the Fed starts raising rates, which is again what we've already seen start to happen. Now, history has also shown that when a yield curve inverts, a recession follows, usually not right away, sometimes a few months to a year later. Now, does that mean that we're guaranteed a recession this time around? And not at all. We need to remember that when a recession happens, the economy retracts and no longer is growing. We experience a rise in the levels of unemployment and a fall in retail sales because people are spending less as a result. Now, no one likes a recession, of course. However, they are part of the economic cycle. And we must remember that not all recessions are the same. Most of us, I think, remember the 2008 financial crisis, the Great Recession, which was the second worst recession next to the Great Depression. And that lasted us a year and a half. Not too long ago, we also did have a minor recession in 2020 due to COVID-19 and the economy shutting down, which lasted a few months. Again, we can't control when a recession happens. We can, however, control our preparedness for a recession whenever it does eventually happen, whether that's in the next month, next year, or 2 years from now. Now, if you're working, ask yourself, do you have sufficient cash reserves to cover your necessary expenses for a prolonged period of time in case you lost your job? If not, it might be a good time to review your cash flow to see if there are any discretionary expenses, unnecessary expenses that you can minimize or eliminate to increase savings. If you potentially might need to tap into your investments to cover some of those shortfalls, it might be a good time to revisit your portfolios to make sure that you are taking on the appropriate amount of risk given your financial needs and your goals. Now, if you're retired or nearing retirement, ask yourself, is your retirement income going to be enough to cover your necessary retirement expenses during that recession? Healthcare, food, housing, etc. If you will be relying on your investments to help supplement your income needs, are they invested and allocated properly based on your financial needs, the time horizon you have, and the goals to provide the income that you need throughout a recession and beyond? Now, these are just some of the things that we can do to prepare ourselves for the next recession whenever it happens. Remember, no one has a crystal ball to predict the future, no matter what you read or what you see on TV and in the internet. The absolute best thing we can do for ourselves is manage what we can control appropriately and intelligently. If you have any questions or would like to meet, please visit our website, mavenbridgecapital.com. Send me a message. I'd love to connect. Thank you so much for listening. Have a great day.